Hello again from the National Real Estate Post. This is Frankie Ray here with Barry Habib. Once again, we've got him on the show. But before we get started, we've got to do our housekeeping. We've got to let everybody know about Angel Oak. Barry, they are subprime lenders. They are absolutely fantastic. They do a terrific job. And we did a webinar with them where we went into kind of detail on exactly how the subprime works today. Responsible subprimes, nothing to be afraid of. This is actually stuff we need to embrace. In fact, I had a guy call me, got involved with these guys, and he's added like 3-4 deals a month to his book of business because they've introduced subprime in. You know, these are deals that would walk away that now they're able to get done. So if you guys
It's nice to add to the things you do, and they do it the old-fashioned way too, so it's good.
Yeah, it's great. So they're awesome. If you guys want to check out the webinar that we did with them, it's recorded. All you got to do is click the Angel Oak banner on your right, and you can check out that webinar, and you can even fill out a little form there. They'll get a hold of you and get you all set up. So with that, Barry, the last time we had you on the show was January 15th, and you gave us some really good insights to what you thought about the year. And in fact, it was a really well-viewed show. A lot of people watched that show. And I thought, well, we're going into February now. Maybe we get you back on the show again. Just tell us what you think about February. Of course, we'd like to do this throughout the rest of the year, just have these conversations with you. So what are your thoughts on this month coming up? What should we be looking out for? What's in store for us?
Well, we hit a couple of targets. We did say that the S&P would drop down towards, we said 1820. It dipped a little below that to 1814. So it did hit that target and exceeded that a little bit. And then we did get the bounce that we thought we'd get from that level. Is this bounce for real? What do we expect from here? Well, first of all, as far as the stock market goes, I'd like to see the S&P close convincingly above 1935. And then I think you can have some more momentum to the upside. If it doesn't really have the ability to close and hold that level, we could be in for another test of those lows. And you got to look at the overall. Our economy is not really rebounding very well here. We can see the manufacturing sector is truly in a depression, and we have corporate profits. They've decreased by 7%. It's not the greatest environment at the present time for stocks, but the thing of it is, where else are you going to put your money? And the Fed really has dictated this, because the Fed, since we last spoke, we did get the most recent Fed meeting, and the Fed tried to kind of thread the needle. They said, hey, look, inflation, we don't have any inflation, okay. But they also said that the jobs number was really strong. And here's the thing, Frank, is that these guys are such academics. It makes me freaking nuts. When we did our report the morning of the jobs report, it's 292,000 jobs. But you know what? You know what nobody's looking at? 40% of them, 40% were 16 to 19-year-olds.
Wow.
December, 16 to 19-year-olds. Come on, you don't have to be a rocket scientist.
Right.
So what was this? This was some seasonal
Christmas.
hiring.
Yeah.
Exactly. So I think that this Friday's jobs number potentially could be a little bit softer. Now, It doesn't always hold true with these numbers because they use so much modeling it can get screwed up.
Yeah.
But there's another thing too. Initial jobless claims during the week that they used for a sample, people claiming unemployment benefits for the first time, that was higher than normal. So this has the makings of a weaker jobs report, and I think that could help interest rates. The funny thing is the stock market now is like, it's almost bad news is good news. Because if it's bad, they'll say, the Fed's going to have their hands tied. No way they can hike rates. Remember, everybody's talking about 4 rate hikes, and I said, maybe one, probably none for this year.
Yeah.
Now it's starting to swing the other way very quickly. A lot of people are starting to say, hey, maybe there won't be any rate hikes. So once the Fed kind of abandons that, stocks could pick up a little bit of steam, because once again, where else are you going to put your money?
Yeah, that's right. So you're feeling in the immediate month, the next couple of weeks then, you're thinking we might see a little improvement in rates then?
I do.
Yeah.
I think that there's a good chance for that. Look, we want to be careful. Of course, it could change quickly. And, to try and guess the jobs report, heck, that's one of the hardest things in the world to do.
Yeah.
And I have been wrong in the past. I will be wrong in the future.
Yeah.
I certainly do not get it right all the time.
Yeah.
But I think that there's the makings. The chances, in my humble opinion, are that this job report probably comes in a little softer, and it probably helps rates a little bit. That's my humble opinion.
All right. Well, that's good enough. I'll leave that with everybody, and I will point everybody. Don't forget MBS Highway, guys. You can stay in touch with Barry virtually every single day. We'll put his link either down below or somewhere wherever you're watching us, so you can go and you can try it out for free for a little while, for a week or something like that, right?
Yes, you definitely can. And I hope you guys do, because I think it's worth it. But Frank, I wanted to mention about housing. Now, we did get a lot of housing data since the last time we spoke, and virtually all of the data comes in showing that housing is really still strong.
Okay.
And I think will continue to accelerate at a very nice pace. Now, if we see 5-6% appreciation, like I think we will for most of the country, we all know it's local, so it all depends on your market, of course. But
Right.
if you say what's the average around the country, think about what that means on a $300,000 home. You're talking about $15,000 to $18,000 for people who might miss out. All they're going to do if they miss out is watch their rents go higher.
Right.
Because rents are tight; they're going up at 4% a year, and miss out on $15,000 to $18,000 in gains. We need to get the message out to people that now is such a good time to purchase a home. It is an amazing opportunity that exists currently, that may not be around 3 or 4 years from now to the degree that we see the opportunity today.
Well, that's awesome. And what you guys can do is you could share this video right here with your database, maybe with a little subject line saying, hey, if you know anybody who's sitting on the fence, maybe watch this video to understand it's a good time to go. You might see rates ease up a teensy bit. Hopefully they do. Plus, housing is still strong. And if you miss out, you miss out. You're going to miss out on a lot of appreciation going forward. So feel free to send this video around, guys.
And one of the other drivers too is the oil market, and the oil market has come up a little bit here, just on talks that Russia and Saudi Arabia may cut production, but they do a lot of jawboning. I think when it comes down to it, there is so much excess oil right now. I mean, tankers are offshore loaded with oil.
Yeah.
We look at things called contango and backwardation. When we look at these formulas for contango right now, it seems to me that there is still some room to the downside for oil prices. Keeps inflation low, doesn't have the stock market kind of get into rally mode yet, and that's all those things do help interest rates. So looking for a favorable interest rate environment, at least over the near term. And look, if you haven't done so, refinances, it's a good time to call people again.
It's a good time to do that too. Yeah.
Yeah, you're well below 4%.
We've been fortunate to have a pretty doggone good environment as far as mortgage is concerned for a while here, and it looks like we can keep it going for a little bit longer, and might as well take advantage of it while you can. So
this time of year, right now, talk to every accountant you know, because they're about to speak with all their customers.
Good call.
Great time.
Good call. Accountants, CPAs. Great advice, Barry. Well, I'm going to go ahead and sign off. Guys, leave us your comments down below. Barry does answer those comments a lot, so if you have something that you would like to ask him, put the comment down below, and he'll jump in there. He'll talk to you guys. Enjoy the MBS Highway Trial. There's a link around here somewhere. Always appreciate your insights, Barry, and letting us know what to expect going forward.
You bet. No, I appreciate you, brother. You guys do a great job every day. You look out for us, so thank you.
You betcha, buddy. We'll have you on here again soon, okay?
Okay.
All right, you guys have a great day. We'll catch you later.
Bye.